Good morning, everyone, and welcome to today's webinar, How Businesses Take Control of Their Numbers so they can live the life they want with Lielette, Calleja. Today, you are listening using your computer speaker system by default. You'll have the opportunity to submit questions to Lielette by typing them into the questions pane on the control panel. You may send in your questions at any time. We will collect these and address them during the Q&A session at the end. Lielette Calleja is recognised as a long-time industry advocate for the accounting and bookkeeping industry. As the founder and director of All That Counts since 2004, Lielette leads her team to action her purpose, enable small businesses to harness the power of their numbers using technology so they can live the life they want. Lielette has spoken globally in Asia about technology, digitisation, pricing, future trends and embracing change. She recently co-hosted the Amex Idea Exchange Masterclass on digital dollars with the mentor, Mark Boris. He believes that being small does not mean you need to think small, as there is nothing small about small business. Lielette is the public officer for the Sydney Hills Business Chamber and sits on the AAT Advisory Division of Institute of Public Accountants. In 2019, Lielette was awarded the Editor's Choice Award by Accountants Daily for her dedication in championing professionalism and progress in the Australian accounting industry. In 2017, her firm was named Australian Intuit Firm of the Future, and in 2016, Lielette was awarded the Sydney Hills Business Person of the Year. I will now hand this over to Lielette.
Hello. Thanks, Ada. Wow, that's a mouthful, isn't it? I had no idea I had all those credentials behind me. So I think that takes us to the end of the webinar. How are we all doing? So as Ada said, I'm Lielette Calleja, and it's wonderful to be here with you all today. We are a small group, and that's actually not a bad thing, because it means that you can ask some questions in the Q&A. So I'm happy for this to be an interactive session and not one that you just have to listen to me rattle off. So please, if you want to ask, if there's something I'm saying that you're unsure about or you'd like a bit more clarification on it, please ask away in the Q&A box, or you can leave the questions until the end as well. So let's start, and if I can actually I wouldn't mind finding out where everyone is from. So if you just don't mind putting your states in you can just, I think there's not, I can't see a chat box, but I can see a Q&A box. So happy just if you all just want to put away. Sydney, Diana, nice to have you. I'm from Sydney too. Okay, and who else? Just to get a feel for what states people are in and what they've been up to, and the economy. Melbourne, Robert, yes, well, I'm sure you're happy that the state's opened up as well. Do we have any Queenslanders? Sure, yes, I agree. No Queenslanders, we've just got, Sydney and Melbourne. By the looks of it, Kingscliffs, Seal, that's New South Wales. Okay, well, I'm based out in the Hills District. I don't know if you know where that is, out in Norwest Business Park area. Okay, so welcome everyone, and thanks for taking time out of your busy day, particularly around Christmas. I know you guys are probably swamped trying to get a lot of all those promotional products out, Christmas gifts. I've actually worked I've had some clients in the promotional industry, so I know a bit about it. I know it's not just one product that you sell magnitudes of products. So I can really, I guess, sympathize with you when it comes to keeping track of all your sales and purchases. Okay, so just a little bit more about me. I've worked with SMEs since 2004. I've had my business now for 16 years. It's called All That Counts. And predominantly what we do bookkeeping, management accounting, CFO, process improvement, automation and payroll. So we do a lot of work in the digital space, where we take businesses who have been using lots of desktop tools to the cloud, to using cloud technology. And I think most of you are already using things like Xero and QuickBooks and MYOB. And I'm guessing everyone here is using some form of cloud-based technology. And if you're not, please let me know as well. But I think that's, from what I saw, we're all on the same page. Okay, so enough about me, but by all means, if you are into social media and you would like to follow me and get some tips, or just to see what it's like in a life of, in the day's life of Lielette Calleja, by all means, follow me on LinkedIn, Instagram, Facebook, and Twitter. I'm under All That Counts and Lielette Calleja. Okay, so today's presentation, we're going to cover 4 areas, and I won't bore you. We're going to look at debtors. This thing about accounts receivable, customers giving you excuses. We want to try and work through that so you're not having to hear all these excuses from your customers. And cash flow, yep, show me the money. What is it that we can do to improve your cash flow? We're going to look at things like the symptoms of cash flow, how to avoid cash flow problems, and also what to do when you do have a cash flow problem. And what are some of the profit drivers that you need to understand in your business? Because if you don't understand these profit drivers, then nothing else matters. And what are some of the essential reports that you should be looking at as a minimum on a monthly basis, whether that's your accountant or bookkeeper providing to you, or you're doing it yourself? These are the things you need to be looking at every single month as a minimum. And this is where I guess we say, if you have the numbers, you can control things, and you can then sit back and go, well, you know what, making more sales is not really giving me the lifestyle that I want, because I'm having to work 10 times as hard and earn a lot less money, take home a lot less, where I can half my sales, but be really selective on the type of clients I work with, the type of products I want to sell that yield me a higher return. Now, I can speak truthfully, because I did that in my own business. Although it's completely different to yours, it is a service-based business. We halved our turnover, we halved our staff, and we decided we only wanted to work with certain types of clients, but we ended up making 200% more profit because of that. So when people say, what's your turnover? It's really a vanity metric. It is great if you want to sell and you want investors. Yes, they look at that top line, but if you're happy running your business for a lifestyle and you just want to retire on that and sell it down the track, then it's probably something you want to look at. It's more about the margins and what you take out of it rather than the turnover. So I just wanted to start with that. And by all means, again, if you just want to have a chat with me, you can. I do have to keep hovering over to the Q&A to see if there's anything in there, because it's not pinned on my screen, but I will keep checking. So I like this saying from Benjamin Franklin: creditors have better memories than debtors. And I'm sure you can all agree with that. As soon as you owe someone money, they're on that phone and they're reminding you, right? But as soon as someone owes you money, don't know if I remember seeing that invoice. So that's really what I think what I'm trying to say here as well, is if you're not front of mind with your customers or clients, then they're not going to have a memory to pay you as well, especially if they don't have a robust accounting system where they book your invoice in and to pay you. That gets quite difficult. Okay, so I've got a few slides here I want to share with you. So these are 6 ways to reduce your debtor days. The first thing I look at is payment terms. Believe it or not, now I've been in business since 2004. I can tell you how many times we have seen invoices come into our clients' accounting system where we're trying to work out what the payment terms are. People don't put that on there. Now, if someone puts a payment term of 7 days, what will happen in a lot of the accounting software, especially if you're using something like Receipt Bank, which scans your invoice, or if you're using the receipts capture like HubDoc in Xero, or you're using Receipt Bank with QuickBooks, or the expense capturing in QuickBooks, it actually picks up the payment term. So if you don't have visibly your payment term, it's not going to pick up. And what will happen is that your customer will set their default payment term. their default could be 30 days, 45 days, if you're lucky. So make it really clear that you are 7 days or 10 days. Okay, it's probably more important that that is more visible than the total amount, because the amount is the amount. People won't question that. But if people can't see the payment terms, your invoice can get stuck in the process somewhere. Monitor creditor limits. Look, you know, since COVID, I think we've all learned a valuable lesson here is that, you know, there are no friends when it comes to business. We all need money to live. So look at your credit limits with, you know, different customers on a need basis only. So I'm not saying set a blanket credit limit, but there are going to be some customers where, you know, well, you know what, the risk here is probably greater. My maximum exposure that I can afford to lose is X dollars, and that will be the credit limit that I insist. Now, we've got some clients who have credit limits where it's not a set credit limit, like it could be like 10,000, and then once that customer reaches 10,000, they still want to place orders, they have to pay for that order. So you're still working with the customer, but you're protecting your dollars. The other thing that's really important is payment options. Now, believe it or not, you know, if you're not offering things like Afterpay, Zip It, you know, all those other things that, you know, I'm not a huge fan of, I've got to say, because for me, I believe that, you know, if you don't have it, use a credit card, and also, you know, budget your credit card as well. But the generation of today loves this stuff. Whether we like it or not, it's here to stay, and it's going to be the way of the future. So I would suggest, especially if you want to attract more online sales, you need to have things like Afterpay to offer for people as well. Now, I know people who don't buy if there isn't any Afterpay type of payment arrangements. On your invoices, make it super easy for people to pay you, that they don't have to leave the invoice. Have an online pay now button. So if you're using something like Xero and even MYB or QuickBooks, you can link that with a PayPal account, or with one of, you know, with a Stripe account, something like that, where people can pay you straight away. People don't want to be inconvenienced and don't want to have to leave their account, their invoice, particularly if you've got some one-off sales. For your larger customers, I understand that it probably has to go through an accounts department and be authorized. That's fine. But this is an opportunity for you to start selling to possibly even not to a B2B, but a B2C, business to consumer. So think about those things as you get into the new year and are starting to think about how can you come up with some new ideas to attract new business, but also get that money in the door a lot quicker without having to put more admin onto it. Late fees. You know what? I'm a huge fan of spelling this out. I'm not saying you enforce it, but it's an incentive for people to pay on time, knowing that it's there. Make sure that whatever you use is mobile friendly and you have auto reminders set up. So if you're using the accounting software of today, like the Xero and the QuickBooks, I won't keep saying the names, you know what I'm talking about, then you can do auto reminders as well. I'm a huge fan of set and forget in some aspects, because the bookkeeping can work for you while you're asleep. So you can have your auto reminders go out. And in some cases, you probably don't want to send auto reminders, so you can change that up, or you can just tell the client, look, well, you're going to get an auto reminder, but I know we have a deal in place, just ignore it. So it's also showing everyone that you take your cash flow seriously as well. You're not a charity. You are here to provide a service and products, but you also need to be paid on time so you can keep operating. I think in this day and age, we all have to be problem solvers, whether we like it or not. You know, we've got to keep sales alive, and it's about doing what we can to help our customers, our clients, pay us on time without losing future sales. So it's trying to find that right balance. So renegotiate terms with them if you need to, so do that, or come up with some payment plans that is good for you, but also works for them as well. So don't throw the baby out with the bathwater straight away. Try and negotiate what you can, because it's easier to keep existing clients than it is to win new clients. And stay front of mind. Send out monthly statements. Don't assume that someone has your invoice. It only happened to me this week. I needed help with my IT department, my IT guy. And the first thing he said to me, he goes, yeah, I'll attend to you once you pay my invoice. And I was taken back, and I thought, pay your invoice? I haven't seen one. He said, no, I sent it to you in April. I'm like, right, April, we're now in December. Great, accounting system you have happening there, chasing up debtors. So I went through my emails and I did find it, but it just got lost. It must have got lost throughout all of COVID when we were doing lots of job keepers and things. The point I'm making is that he should have followed up, not when I needed something, because if he didn't follow up with me, what's his cash flow like? So had he have sent a monthly statement, my assistant would have found it as well, and we would have paid it. Nonetheless, we paid the invoice, we got our service. So just bear that in mind as well. If you have lots of customers who aren't paying, just get into the habit of sending out statements. Okay, so that's how to reduce your debtor days. Do we have any questions on that? No? Okay. Looks good to me. Let's keep moving along. So we're now going to look at cash flow, and I'm sure you've all heard of Robert Kiyosaki, and he says making more money will not solve your problems if cash flow management is your problem. And that is so true. Like, there's no point, it's like I was saying before, there's no point making more sales if you're going to have a massive cash flow problem. So we're going to look at some of the things, some of the rules you need to live by in order to alleviate some of these cash flow problems. So look, there are some things in life we can never control, and something like, COVID that happened, unfortunately, really, turned the world upside down and a lot of businesses on its head. And I'm sure your industry was also affected because people just didn't have the budget. So, but hopefully now it's all coming good. So I just want to go through a few of these, 8 cash flow rules to live by. So the first one is don't confuse profits with cash. Now, cash and profits are not the same thing. Profits are an accounting concept. It's not money in the bank. Profit is what's left over after you subtract all your cost and expenses from sales. Okay, it's not cash flow. So understand the difference between profit and cash, because cash can be tied up in so many different things, and we'll go through that. Cash flow isn't intuitive. It's not like saying, yes, profit, it costs, a sale costs me this, and these are the expenses, and this is what's left. Cash flow isn't. There's so many variables to take into effect. So if you're trying to calculate cash flow in your head, it's going to be quite difficult. So you do need to have some kind of tool or a spreadsheet to be able to do at least a 3-month in advance cash flow. Working out your cash flow for the week is not going to cut it. You need to forecast. Now, what I say to my clients, rule of thumb, have at least a quarterly cash flow forecast, because that will at least tie you in. If you're on a quarterly BAS, it'll at least give you the bigger picture of where you are when your BAS is due for payment and your PAYG and all that stuff. Anything less than that is not going to help you. It's just purely a waste of time. So do a 3-month forecast, but then if your cash flow is really tight, I wouldn't even be surprised if you need to do it daily and weekly, just to make sure that you're paying who you need to pay. So you're managing that, at a granular level, and then you know what's coming in. And then also at some stage as well, using the credit card. Like we told our clients throughout COVID, start using your credit card, but manage that as a debt as well. It's got to be repaid, but all it's doing is buying you some extra days, the extra 30 days on credit. So until you get your cycle up and running. So it wasn't a way to get them out of debt. It was more of a way to manage that cash flow cycle. And that's the only time I encourage the use of credit cards. Growth can absorb cash as well. So if you've recently, or you have in your years of running your own business, you will know that when you go through growth, you're going to need extra cash, especially if it's sudden. The best times in business can be the worst times as well, particularly for your cash flow. So the impact of having to buy, that extra stock sitting there can be devastating. Because you want to grow, but you need that inventory because you know you're going to sell it. So understanding that you need that extra working capital is essential as well. So the faster you grow, the more financing you're going to need. Growth, so B2B sales, they suck up your cash, okay? It's not like you're in retail and you go and you buy something and you hand over your card or your cash. That person has collected their money, that business. In your business and my business, it doesn't work like that. We have debtors, accounts receivable, because we invoice people. So you need to understand that that is one of the rules you need, in your business that you need to know. And so, don't just assume that because it's a sale that it's money in your bank account. And you all know that anyway, so I don't need to go through that. So let's look at number 5. Inventory ties up your cash. Yes, it does, because you have to buy your products before you can even sell it. Even if you put the product on your shelf and you wait till you sell it, you probably have to pay your supplier before you sell it 9 out of 10 times, depending on what it's, if I recall in your industry, there's certain things you need to pay up front, and you try and get your deposits from your customers up front as well. So that at least it gives you the cash flow to pay for what you need to pay for up front, especially if you're importing products as well. So every dollar you have in inventory, you don't have cash available to you. So just remember that. Try and keep your inventory levels as low as you can without it sacrificing your future sales. It's a balancing act. I really understand it, especially when I have clients who have a retail store and an online store, and the investors are always telling them, well, you've got too much inventory. And I'm like saying, but this is the cost of doing business in an online world. If you don't have the inventory available, you can't sell. So people, if they're online, it's not like they go into a retail store or they ring your office up. You can probably convince them to buy something of equivalent, something better, but online there is no one there to do that change mindset. If it's not there, they'll go to a competitor. So that's the difference with an online business as well. So working capital is your friend, okay? It will give you peace of mind. So many businesses do start up without not enough working capital, okay? So that means they don't have enough money to actually buy inventory, pay wages, pay rent, and pay for expenses. So when you do a cash flow, you will know what your working capital is. So if you've got investors in your business, which we have clients who have that as well, we have to consistently update those forecasts, because we need to request more funds from them to be able to keep the doors open. Now, one of the big things is, like I said, there is a difference between profit and cash flow. So if the business wasn't making profit, that'd be a separate issue in itself. But if the business is making profit, but they're just cash flow poor, then that's where people don't mind, putting money into it, because you can explain where your cash is tied up. So the so-called best practices aren't always, best practices, and aren't enough. So every business is different. So, and I think COVID really cemented this for me and for a lot of businesses, is that whatever was best practice just went really out the door. The best practice was what worked for you and your customers. And I think, and that's something you just need to keep in the back of your mind, is that you have an opportunity to rewrite and create your own rules of doing business. And that's exactly what I did. But I did this even prior to COVID. So don't just assume because it's the way everyone does it. Your situation, you are all unique, and you all have your own, your numbers all tell a different story. So just keep that in the back of your mind as well. So if you're dealing with larger organizations as well, if some of your client base is, some of the big, massive corporates, then you're going to have a different rule for them than you do for your smaller businesses. Okay, so it might not be the best practice, but it might be what you need to do to keep that account because it's a profitable account. So feel comfortable in doing that. And bank and investors hate surprises, okay? So if you know that your business is going to need some additional funding, whether that's a new credit card or whether that's a line of credit or an overdraft or a loan, whatever it is, plan ahead for it. Start putting together some cash flow forecasts. Work with your, with your accountant, bookkeeper who can help you put that together and see where your business is going to travel for the next 6 months. Don't just, show up every day hoping for the best, because when you hope, you know what happens. So try and plan instead of fingers crossed and let's hope. Okay. So symptoms commonly caused by cash flow problems. So we all know that debtors are too high. Okay, so have I just skipped a page? Let me just check, guys. Sorry. I think I may have said no, working capital is your friend. That's good. We haven't not skipped a page. I'm just going to come back here. Here we go. Okay, so debtors are too high. Your accounts receivable, that's a symptom. If you can't control your accounts receivable, if you've got things out in, 60 days, 90 days, and it's not coming in, I would even pay for someone to get on the phone for a day and start sending out copy invoices, because that's your money. Like it's not right that it's sitting out there. So start putting some plans in place to get that money through the door. And like if we go back to how to control your debtors, talk to them about being able to, paying it off as well. So people want communication. So be in contact with people. So if your debtors are too high, chances are you're going to run into some kind of cash flow as well. Couple that with you have too much stock. Okay, if you have ordered a whole heap of stock at the chance and at the hope that you're going to sell all these mugs or these cups, whatever it is, if you have bought it because it was a good price, or you had to buy it because there have been issues with the ports and you needed to have stock local. Again, you will probably have some issues with your cash flow. So I can't emphasize that enough. You've overextended your business. So eager to grow quickly, but it's important to make sure you do so at a reasonable rate. So if you've overextended your company, your cash has been tied up, you're going to end up having a working capital problem as well. And number 4, if your sales are declining. So clearly we all saw this happen throughout COVID, and that's okay. So if you can come up with a reason why sales are declining, whether that's the economy has been put in shambles as we have, or whether you've got a lot of new competition, now that can be dangerous as well, or it just could be seasonal, it's quiet time and you've planned for it, that's okay. But what happens if this happens month on month on month? What will happen, and I see this happen all the time, you start discounting heavily because you want to win over the competition. So your sales might be increasing, but your margins have declined. And don't forget, your profit is where your margins are. So if you're not having a lot of profit, but your sales are up there, you're not going to make enough money to pay all your bills and pay your suppliers on time. So to combat the decline in sales, you might want to adjust your whole sales marketing strategy, or at least if you know that this is just the way and you're going to ride it out, you need to look at how you can cut costs from your business. So that's something that's really, I think, affecting a lot of businesses at the moment where sales are declining and not making enough profit. And that can be because you're discounting your sales, and or your suppliers have put their prices up, but you know that you can't do the same because people will go elsewhere. So you keep the price where it is if you're not discounting, but your costs have gone up. So again, that's going to impact your profit as well. So these are all symptoms, but if you don't have the reports and if your accounts aren't structured in a right way to be able to pinpoint these symptoms of cash flow problems, then you're going to get smacked in the face. And before you know it, you're not going to have any money to pay the ATO, pay your wages, pay your super, and you're going to start to struggle. And that's going to keep you awake at night, unfortunately. So that's just one of the downsides of running your own business. So they're the symptoms. So how do we prevent then the cash flow problem? So keeping a cash flow forecast, first of all, and I think I'm going to show you what that looks like. And hopefully some of you have already got a cash flow forecast, or you work with your bookkeeper or accountant to do it. But if you don't, if you take one thing out of today's webinar, I want you all to walk away and start putting together a cash flow forecast. Even before you look at your profit and loss statement, I just want you to look at that. That is your priority over your BAS, over anything else, is a cash flow forecast. Now, it's going to take you a bit of time to work through it, but it would be so much better if you take ownership of it and not your bookkeeper or your accountant. You need to own this piece of document. It's not difficult, but it will take you a bit of time to get the rhythm and to start managing your own cash flow. Okay, so just back here. So I want you to compare your projections to also reality. So because you need to know if you're really way off board what you've projected. So you might say, right, we're going to do X amount of sales, but you may have done those sales, but don't forget, this is a cash flow. It's not a P&L. So it's about the timing when you're going to expect the income coming in compared to when you're going to physically pay for expenses as well. So that's the difference. So it's not about how much sales you're going to make, it's about when people are going to pay you. So I want you to compare the projections to reality. So you have two columns. One is projection, forecast, one's the reality. Because what that's going to do, it's going to allow you to see where you need to improve. Where are things going wrong? Why, you have to pay wages. So then why aren't you getting enough of this money in? I used to have one of my very first clients had this gun of a girl working for them, and all she did, her job was back then, was just to get on the phone and just make sure people were paying. Now, if she didn't do that job, people weren't paying. And it was probably, she was also on a bonus scheme as well. If she got X amount in, they would give her a bonus. She was worth every single dollar, because without her, the business couldn't have kept their doors open. So don't underestimate the role of, even if you spent, half an hour a day trying to get money in the door, even if people tell you that they can't pay you, knowledge is power. Knowing that they're not going to pay you, knowing that you have a commitment from them that they will pay you in 2 weeks from today, is power to you, because then you can plan for that. But when you don't know that, you can't plan for it, and you're just going, well, where am I going to find the funds this week? So this is where I'm trying to get to, trying to prevent your cash flow problems. Prepare multiple scenarios as well. So best case scenario, worst case, and somewhere in the middle. Really important to do that, because I recall when COVID first hit, I did it for my own business. I went, okay, well, what's going to happen here? Some of my clients in hospitality are definitely going to be affected. So they'll have their doors shut. We'll probably lose, we'll have to stop invoicing them. So I did that. I said, okay, this is worst case scenario and this is best case. And I left my computer feeling, okay, well, we can get through this, because I knew, I had the knowledge. I wasn't running blind. And we did that with most of our clients as well. They weren't running blind. They knew that they were going to get into trouble, in 2 months' time. So it doesn't make it makes you, I believe it just makes you a more responsible business owner, knowing these things, because you're not only in the business to sell something, you're in, you have to be the responsible employer, the responsible business owner. And if you've got family and they're reliant on you, you've got responsibilities as well. So all those things, and which is why we need to keep it so real. Okay, it's not a fictitious, it's not a what if, it's not, it shouldn't be pie in the sky stuff. Okay, you've really got to keep it real. And it's just one of those things that, unfortunately, it's not something we don't want to see. But if you are going to go into the red, better and that way you can go see your bank manager, or you can go see family or friends, or some of those loan places who can lend you the money. But you need to be able to see that it's just a short-term solution, because your business will turn the corner. Now, if your business doesn't turn the corner, then that's another conversation altogether. Okay. So how to improve your cash flow? Okay, first thing you need to do is you do have to keep real-time good books. So if you're not attending to the reconciliation of your books, entering all your expenses, every single day, then you're not going to be able to keep a pulse on your business. If you're using solutions like Xero, QuickBooks, MYB, there is no excuse not to have your books done every single day, or at least twice a week. With all our clients, we manage their bookkeeping every single day. That's just the way it is, because they use all those solutions and they can log on to their files at any given time, and they can see what the bank balance is, who owes them money, who they owe money to. It's all real time. So if you are using those tools, there's no point having them if they're not helping you drive your business. You need to manage your forecast, which is what we've just discussed. Manage your debtors as well. Minimize your cost. Now, as much as, first thing we did, and lots of other businesses did, I actually just exported my bank account. I did it both. I did my personal bank account and I did my business bank account. I exported the transactions into Excel. I just started going down. I went, yep, I don't need that. I don't need that. Reason why I did that over exporting it from my accounting system was in your accounting system, you only see your category accounts, chart of accounts. I wanted to see who I was paying. So I was able to save just in the first hour looking, and that just shows how terrible I was at probably saying yes to all these subscriptions. I was able to save about $800 a month just on subscriptions that I didn't even need. So I liked having them, but I didn't need them. So what I would suggest is you go through your bank accounts, both personal and business, export it to Excel, and run your eyes through it and sit down with your family, whatever you need to do, because I did that with my husband. Do we really need this? It's a nice to have, but you know what? We can do with it. We can do without it for the next 6 months. Let's just pocket that money, either put it back into the business. He runs his own business as well, or we'll just, save money. So do those things as well. It's actually liberating to do it. And then and if you've got nothing to save, that's fantastic, because then you're running lean already. Send out invoices immediately. Don't sit on them. As soon as you get that order in, send out the invoices, okay? And don't forget to also send out statements as well. Think about leasing instead of buying. So even if you lease a piece of equipment with the instant tax write-off, if you're taking advantage of that, you can also leverage off that as well. Reason why I say leasing is if you've got an equipment and you need to buy a new piece of equipment, Rather than buying it outright or even a motor vehicle, lease it through the business. Keep that money working for you as working capital. I see so many businesses who think they have 200 grand sitting in the bank account, they're going out, they're going to spend money on a $50,000 vehicle, and it's like, well, why'd you do that? Like, you know, it's not an appreciating asset, it's a depreciating asset. You should have leased it or taken a chattel mortgage or a hire purchase, and you should have used that money to increase your business in making it better, you know, with production or whatever. So they're the things you need to think about when you're deciding, do I lease or do I buy? Maybe look at a new marketing campaign in the new year. You know, is what you're doing, is it working for you? Isn't it? Talk to SEOs and talk to marketing people who know your space as well. They can say, right, you know, this is what people are Googling. You know, people want t-shirts with screen printing. And can I just say, I was at one stage looking for someone to do some t-shirts for me with screen printing, and do you know, I found it very difficult to find anything on Google. So and so now when I see something in, you know, on Facebook coming up, advertising, I'll always take a note of it because I'll always need something like that. In fact, I personally don't see enough promotional stuff on social media. Not that this is a social media webinar, but just an FYI to all of you. So I think you've got an opportunity there, because I certainly don't see it, and I live on social media is where I do a lot of my networking as well. Open up a business savings bank account. If you haven't done that, then do it. And if you have one that's sitting there as a GST account, start using it. Okay, start getting back into that habit that we all used to do when GST first came out. We'd take out 1/11 of the income. Start doing it, because what's happened since COVID is every single business has had to start thinking like a startup all over again. So I highly encourage you to start using that. Whether you want to use it for a holiday or for something, just start putting some money away, whatever percentage, whatever. It's a little achievement that you will have for yourself. My husband only told me the other day, and I didn't even know this, he'd been putting a little bit away each time, and we're taking 5 days off next year. And he said, we've already got that money put aside. And I was just like, wow, that's really great. Okay, fantastic. So just those little things. So it doesn't have to be for business. It can be for personal use. Just, you know, for all the hard work you do, have something put aside that's outside of, you know, the wages you take or the drawings you take out. Increase your prices with careful planning. Okay, now I know you're all probably going, well, we can't increase our prices. We'll, you know, shoot ourselves in the foot, our competitors. Well, you know, you might not have a choice. So if you're running lean, you probably need to start looking at how can you, with $1 here or 50 cents here, what impact will that have on your cash flow as well? So when you do those scenarios of, you know, best, worst, and mediocre, factor in a bit of a price increase as well to see what that would do to your cash flow. Okay, so what does the cash flow forecast template look like? This is just, I've just given you an example here of, you know, a 12-month forecast, okay? And how we tend to do it is we break it up between cash received and cash spent. So it's not a P&L. First thing you need to start with down here is your starting cash balance. So you put that in. So whatever your bank balance is, so whatever it is today, you put that in. So let's just say you want to start this from, well, you may as well start it for December, because we're at the start of December. You'll put in what you expect to receive in December. So you might have some cash sales and account sales. So people on debtors, you know, who will pay you. You might have some money coming in from loans, or you might sell an asset, or you might have some other income. You might be getting some kind of subsidy from the government. So if you're getting a JobKeeper, that'll go here as well. Then what I like to do as well, I like to keep it quite visible, okay? Because like I've said here, visibility to make spending decisions with confidence. I like to see who are my major suppliers that I need to pay this month. Now you can break this down weekly or monthly. I'm just giving you the idea. Now I am happy, you will get a copy of my slides after the session, so you can reinvent this, or if you email me, I can send you a copy of the Excel template as well. So maybe just, note some of your major suppliers, so you know exactly when you're paying them. If you're on a payment plan with some of them, factor that in as well. Put things like your rent in here and any other type of major expense you have, or you could just have a miscellaneous line as well. The other cash spent are things like loan repayments. So if you do have any loans, leases and things, any capital outlays like you're buying a new piece of equipment or a computer, put that in here as well so you can see if you can afford it. Your BAS payment as well and your IAS, because all these figures that you are quoting here include GST. Okay, so your sales will include GST. So then you need to pull it out here because you'll be paying it at some stage. So if this is December, you'll be putting, month 3 will be February, which is when your BAS, your December quarter BAS is due. So you'll be putting a BAS figure here. Your wages are in here and any super you're paying as well. As you can see, it's quite a skeletal template, but I didn't want to put too much data. I just wanted you to see the framework as to how it works. And then this will tell you if you, for that month, if you have a positive or a negative cash flow movement. So you can see here we have a negative movement, but we have a starting cash bank of 22 with an ending balance of 13. So that balance gets transferred here, and then you never have to put the starting bank account balance in the template again, because it'll just work itself out if you've entered everything in here. So what you can do as well is you can compare what you forecasted to what actually happened to see where things went wrong. So if you plan to pay your BAS in that month, but you couldn't afford to, you then need to move it from that month to month 4. So that it's a working template, okay? It's not coming from your accounting system. Now, there are cash flow forecast tools that are available that you can link to your accounting system, but to be truthfully honest, it will take a bit of a while to set that up and to manage it. And it's not really worth the dollars that they're worth unless your accountant or bookkeeper already has the tools in place. I find Excel does its job quite nicely, and I'm not a huge fan of Excel, but when it comes to cash flow, I think it works okay, particularly for a small business. So that's cash flow. So the next thing we're going to look at are your profit drivers. And Winston Churchill says to improve is to change, to be perfect is to change often. And that is why you need to review your profit drivers, because if you need to change them, then you need to do that. So I'll just see if there are any questions, because I've been rambling on for forever. And no, there's no questions. Okay. Okay, so let's look at some of the key profit drivers, and I'm keeping this really simple, okay? Price. I went through price and I explained to you that, you may need to look at increasing your price. Now, why I harp on price is because it has the greatest impact on your profit, because every dollar will go straight to your bottom line. Price will always have an impact that is 2 or 3 times greater than any driver. So if you decided to, cut back some of your fixed costs, that will have an impact, okay, it won't impact your revenue, so it won't impact your gross profit margin. So if you're trying to improve your gross profit margin so you can keep some of your fixed costs, then that's okay. But if what you're trying to achieve, if you're sitting at a gross profit margin of somewhere short of 15% where you need to be, where your industry benchmark is, then you'll probably want to have a look at increasing your price. Now, there's a saying that says that, yes, when you increase your price, you might lose some customers. But if you lose those customers and you keep those ones that are willing to pay the price that you want, then isn't that better? Because you can take more money home for less work. So that's where I'm headed with all this, is don't put in the effort and the hours where you're not getting the maximum return. The second one is your variable cost. So that's the cost or, buying the product from your suppliers. So an increase in sales will incur an increase in those costs as well. So your cost of goods sold is your variable cost. So if your sales go up, they will go up as well. So if you can decrease your variable costs, if you can negotiate better pricing with your suppliers, then that will also impact your margins. Okay, won't have an impact in your revenue, but it will have an impact in your margin. So that's another way of thinking, well, how can I so maybe it's a combination of both, increase your price, do better on your margin, do better on, your supply costs. We spoke about the fixed costs as well. And the next one is sales volume. Okay, so sales volume determines if your business is expanding or not. So it's measured by quantity of products or services sold. Now, if you are looking for investors and you're looking to sell, that's probably something investors look at. They're not so concerned about the costs because people can tend to control those themselves, and they can go, well, as long as the sales are where they need to be, we can absorb those costs within our own infrastructure, and we've got shared resources. So again, it really depends on what you want, what your long-term plans are for your business. If you're at that stage where you want investors or you want to sell, then you probably want to be focusing on your sales volume, not so much on your margins, if that's your long-term strategy. So that's why it's really important to every business needs to understand what their long-term strategy is, because these drivers will form part of your strategy business plan as well. So there's no point just going, yeah, we're going to increase our prices and that's fine if you think you want to sell in a few years, because when you sell, people will look at your volume, sales volume. As ridiculous as that is, that's the case. Okay, so reports, we're almost there, everyone. Your monthly financial statements are like kale. It's good for you, but it can be hard to digest. Now, as you know, kale is not something you eat. I mean, mind you, I do love a kale salad, so I don't know why I said that, but I think I had this quote from many years ago with another presentation I did. But yes, it is good for you, okay? So, which is the point I've been making, is with your cash flow forecast, as painful as it is to sit there and be face to face with your numbers and what they're doing, it's the only way you're going to sleep at night and know what decisions and what path to take in the future. So what are some of these reports? And they're reports you probably have at the moment, and I'm sure you do. So the first one is, it's part of your profit and loss. Okay, it's your trading statement. It's that first part of the P&L that you see that's got your income, it's got your cost of goods sold, that gives you your gross profit margin. But what I'm hoping that you're all capturing your income and cost of goods sold by the categories that you sell. So if you've got printing, embroidery, or setup fees, whatever I'm just trying to remember the things that I used to deal with, but try and segment it, clothing, caps, pens, stationery, USBs, all those different things. I'm not saying have a category for USBs and have a category for pens, but your main categories that you sell. So I'm kind of also guessing if you've got a brochure or a book or where you buy all your stuff from, I'm sure that they categorize their products as well. So try and align up with that, because what this will show you is, if you're selling, let's just say you're selling caps, okay? So you can see here I've got, and this is for every month because I've got my income, I've invoiced out, for the month of October, 11,000, but I've spent 5,300 in buying the caps. So I've made 5,746 profit on the caps, and I've made a margin of 52%. So whilst everything else is making me a 70+% margin, why am I focused on caps? Or maybe I need to. So the strategy you take there is, do you push caps or do you push clothing because you've got more margin in clothing? So, but if you don't have your P&L presented to you in this way, you can't tell what how to drive your business forward, and what products to really push on social. So if you're going to do some social media advertising, you also want to be promoting the ones that you can discount as well. So with clothing, you might want to say, right, we've got a 20% promotion if you buy more than 10. You can afford to give it away. But you can't do a promotion on caps because you don't have enough margin in that. So you see where I'm going with understanding your numbers, okay, and taking control of them. So the other thing you can do is when you have numbers like this, I just lost my train of thought. But basically, you see where I'm going at, okay? So if you don't have your income dissected in this way, you're not going to know, what type of category is performing or not. So look, I'm hoping that you already do this in your system. Now, this can be set up in all three products, whether you're using Xero, QuickBooks, or MYB. You just got to map the item codes to these P&Ls. So when you sell, so you're not even inventorying them, you're just buying and selling them, because from what I understand, you buy product and then you sell it. It doesn't necessarily sit there as stock unless you are wholesaling some of those products and you're keeping them there as inventory. That's different. So yeah, so that's pretty much, I guess, what I wanted to say is get this dissected so it can actually tell you a story as to what's happening in your business and where your margins need to be. Okay, the next part of your financials is the rest of your P&L, okay? Don't overcomplicate it. I've seen so many P&Ls that probably have a category for every single type of thing they spend. Absolutely not necessary. It really isn't. The ATO don't require it, and I think it's just more noise for you to look at. Keep it simple, because at the end of the day, you want to be able to glance your eyes over your P&L really quickly and go, yep, that doesn't look right. Oh, I just remembered I said I lost my train of thought. I'm just going to go back because I remembered what I wanted to say. Sorry. Okay. So what I like about this is when I give this to my clients, they'll look at it and they'll go, that's wrong. That margin is way wrong. I know that we only make X amount. So when someone else is preparing your reports and you look at this, what that then does, it highlights, oops, we haven't invoiced someone. Or maybe we've invoiced them, but we invoiced them in the wrong month. Or maybe we actually haven't received the invoice from the supplier. So as you can see, the margins start telling you a story, and you can start doing some forensic work and going, okay, we have an issue here. Let's go see what's going on. So that's why the margins are so important to you as well. Back here. Okay, so keep it simple. I generally like to keep my P&L in several clusters. One is general expenses, okay, and every business is going to be different. Employment costs, keep those together, subtotal them, subtotal your motor vehicle expenses, and subtotal your travel. Now, if you've got things like rent and utilities, you can also subtotal those together as well. I've got some clients who do a lot of online social media advertising. So we have their advertising categorized as well between Facebook, Google, because we need to see what their return on investment is for that as well. So it's just part of their business. So every business will have a different setup, but the basic setup is like this, and please don't overcomplicate it. Okay, so if you've got all these different chart of accounts, if you've got petrol for A, B, and C car, you don't need that. You just need a petrol account. If you want to see how much money you're spending on different vehicles, you can use the job costing function for that. You can create a job costing function, unless you're using that job costing function for your customers. And the last report is your balance sheet. Okay, and now this is a lot of businesses tend to overlook this, but it's probably the most important report you need to keep your pulse on. Okay, because it's a snapshot of your company's assets and liabilities at any single point in time of your business. So your accountant or bookkeeper is responsible for keeping those accounts reconciled and up to date each month or quarter. So when they do your BAS, they need to make sure all these things like your ATO integrated client account, your GST, how much you owe in super, who you owe in creditors, that has all been verified and reconciled. So if you've got an ATO integrated account, you owe the ATO, you want to be able to say, yep, that's exactly what's 14,300 is what's on the ATO portal as well. Things like your trade debtors, you want to be able to show that you've got 223,000 in a report outstanding. Your fixed assets, motor vehicles, they should be taking up the depreciation on that as well. Your hire purchases, they need to be taking up the interest and the principal on those repayments. So again, at any given time, you know what the value of your business is worth. Okay, so looking at the total assets here, it's 516. Total liability is 146. That gives us, a net asset of 369,000. So that's what your business is worth. Your current year profit is 117,000. Your prior year profits, all accumulated as a retained earning, is 305. That makes up your equity. That is what your business is worth. So, and that's the working capital that you have available to you. So that's pretty much that concludes our reports and includes our webinar. I hope you've all taken something away today, and I'm happy to answer any questions. If you don't want to ask them now, you can send them through to Ada later. So I'll just see if I've got any questions. Okay, I run a very small business, 2 people. I'm just going to ask, I'm happy to read this out. I want to work with less clients, but increase sales revenue from existing clients. That is other departments, but more importantly, increase gross profit. I struggle with finding the time and don't really know where to start. What steps would you take to start the process, or is this something we can engage a professional to help us drive this? Yes, most certainly. I think it's a case, it's like I was saying before, everyone's business is different. So definitely engage. First of all, start with your accountant, and only if they're in tune with your numbers. Okay, if they're not in tune with them, then they're going to be useless to you. And I'll tell you now, if your accountant is not giving you some feedback about your business and did not make contact with you throughout COVID at least, to try and help you navigate through all that, honestly, they're useless, and you need to find yourself. I'm not here I'm not an accountant, I don't do tax, but you certainly do need to work with someone who is going to be more hands-on with you and who can help you go through all this. I'm happy to have a chat offline about this as well, because I can certainly have a look. Just by looking, first thing I would look at is look at the customer, the client base, the spend, and I try and find out the margins as well. So there is a little bit of analysis work that needs to be done, but that's a really good question. And that's exactly what I'm trying to, I guess, encourage you all to do, is to start looking at your business at a profit, making more money, but not having to deal with a lot more clients. Okay. No more questions? Feel free to ask. No hurry to leave, but I'm sure you all are. Okay. But if anyone does have any questions after today's session, feel free to connect with me. There is my email address, Lielette@allthatcounts, or you could send me a message through LinkedIn, Instagram, Facebook, or Twitter, and you can connect with me. And you have my details as well. So thank you. It's been a pleasure presenting to you today, and enjoy the rest of your day. And yeah, I hope you all have lovely weather for the weekend.
Thank you, Lielette, for this fantastic presentation.
You're welcome.
Over the coming days, you will receive a follow-up email with a link to view today's recording. I'll also include Lilette's contact details along with her slide deck. On behalf of Lielette, Calleja and APPA, thank you for all our participants in joining us today, and I hope you all have a great afternoon. And thank you once again, Lielette.
You're welcome. Thanks, Ada. Bye, everyone.